Hello everyone. Today I am back with another profitable trading strategy on TradingView.com. This strategy uses two free indicators, but some intuition from yourself, the trader, is always necessary. Like my other strategies, this can be used with any market product that has high volume, including stocks, crypto, indices, commodities, and forex. Okay, now let's get started. The first TradingView indicator you'll need is the chandelier exit, made by Everjet. The second and final indicator we will need is the zero lag SMA, made by VeryFid. As you can see, the chandelier exit buy and sell signals right now are very inaccurate, but we will change that in the settings icon. Head over to Inputs, and switch the ATR period to 2 and the ATR multiplier to 2.8. Okay, now that is done, head over to the Style tab for the chandelier exit indicator and uncheck these options. Now that is done, we must change our candles in TradingView to Heiken Ashi candles, as this candle type works better with the chandelier exit. Finally, head over to the zero lag SMA settings and go to Inputs. Change the length to 50, and press OK. Now that is done, we are ready to run through some examples for long and short positions. For our long positions, we require two things on our chart. 1. The Heiken Ashi candles must be over the 50 ZL SMA in order for us to take longs. 2. The chandelier exit must have printed a buy signal when the chart is above the ZL SMA. If both requirements are met, then we can take a long position on the candle close of the buy signal here. The stop loss will always be set at the recent swing low. And our take profit is variable. For our take profit, we close our position when a candle has closed below the 50 ZL SMA. For this trade, the risk-to-reward ratio was only 1 to 0.72, but as I said before, the risk-to-reward ratio varies with this strategy. Let's try one more long position so we fully understand the concept. Here we can see another valid long position. The chart is above the 50 ZL SMA and a buy signal has printed. Therefore, we can open a long at the close of the buy signal. The stop loss will be set at the recent swing low, and the take profit is when a candle closes below the 50 ZL SMA. As you can see, the risk-to-reward ratio here is different, with a risk-to-reward ratio of 1 to 2. Now it is time for short examples. Here we can see that a sell signal from the chandelier exit indicator has been printed. But is it valid? Yes, because the sell signal was printed on a candle that closed below the 50 ZL SMA. We can take a short position here, on the close after the sell signal. We keep our stop loss at the recent swing high, and the take profit is when a candle closes above the 50 ZL SMA. This gave us a risk to rewards of 1 to 1.7. Time for one more short example. Here is another sell signal that has been printed. This is valid too, because the signal was given below the 50 ZL SMA. So, we can take a short position here. The stop loss is set to the recent swing high, and the take profit is set at the candle that closes above the 50 ZL SMA. This trade gave us a nice risk-to-reward ratio of 1 to 2.7. I want to also note that there can be valid signals for both long and short positions, even if the buy or sell label did not close above or below the 50 ZL SMA. Let me explain. This sell label here has not printed below the 50 ZL SMA, but this one, just like the long position, can still be proven valid to take a short. If there are no buy signals shortly after this sell signal, and the market continues to show bearish signs, then you can take a short. Now it is time to put this to the test. Like most strategies that use buy or sell banners for entries, they can be quite controversial in the trading community on whether they are profitable or not, as some indicators like this one are not at all. But we are going to back test this now to see. After 200 valid long and short position entries, the results have come back as good. I risk 2% per trade, with a variable risk-to-reward ratio for this strategy. The percentage profitability on this strategy is not as high as others, at 58%. But because of the variable risk-to-reward ratio, the returns on some of the trades made are huge, while the losses remain very similar in quantity. This makes it very profitable, despite the low percentage win rate. In 200 trades, we could multiply our equity by almost 6 times the original amount. If I were to improve this strategy myself, I would personally add another indicator to our chart called the MACD, which could help us rule out the fake entries. We would change the MACD settings by heading over to Style, and removing the MACD line and the signal line. If we have a valid long position with our strategy, we should check the MACD. If it is colored green, then we have a good confirmation of bullish momentum. If it is colored red, we shouldn't be taking long positions. For short entries, if the strategy has given us a valid sell signal, then we should check the MACD. If it is colored red, this confirms that there is bearish momentum in the market. If it is colored green, we should not take a short position. I advise you to always do your own research and back testing on any strategy before you trade it for real. You are trading at your own risk, don't forget that. Anyway, that is all for today's video. I hope you have enjoyed and learned something helpful from it. See you later, traders.